Welcome, our dear viewers of Hope Channel Uganda. I want to thank the Almighty God, first of all, who has enabled us to be here and to be where you are. And I want to take this opportunity to thank you very much for whatever you're doing, wherever you are, and whatever you're ensuring that you're surviving, be it in your offices that you're watching us, be it at home, in your businesses as well. We want to thank the Almighty God for this far. So today I'm very, very happy because you're going to be unpacking a very interesting topic of discussion, and that will be insurance demystified, what you need to know about insurance. And with me here we have an interesting, actually financial advisor that will be taking us through this interesting topic of the day. So allow me to welcome him, to introduce himself before we dive into our main discussion. Firstly, I want to thank you very much, Mr. Tayebwa, for agreeing to come and share with us this your insights about insurance and what people need to know, the basics, the essentials of insurance. Please, we pray that the Almighty God blesses you for your time, for your knowledge, and I pray that at the end of this you have clients that will reach out to buy our policies.
Absolutely.
Please introduce yourself to the audience.
Yes, thank you so much, Joan. And I would want to begin by thanking you for calling me to be able to engage with this audience. And I would want to say I'm so excited and delighted to be part of this. And I want to call upon the audience to be able to give us good time, be able to listen in, be able to be attentive, and then we'll be able to see how we can learn one or two things that can change our lives. So my name is Bob Tayebwa, as you've mentioned. I work with ICEA, Lion Insurance, one of the top financial institutions in Uganda, doing insurance, pensions, and mortgages. And I would want to say I am a senior financial advisor, and my role is basically to do exactly what I'm doing today, to disseminate information, to be able to help people to make good financial decisions by using insurance products to be able to achieve more in life. I'm so happy to be here, and I'm looking forward to a wonderful engagement.
Well, thank you very much for that beautiful introduction. So to you, if someone is watching us right now and doesn't know what insurance is all about, what is insurance and why is it important for someone to be insured, or why is it important for someone to insure their children, their businesses, or their lives as well?
Okay. Thank you so much, Joan. Insurance, I would want to briefly describe it. It's something really that shouldn't be so alien to us to understand. It is basically a contract, and this contract is between the insured and the insurance company, like ICEA Lion, whereby the insured pays a specific amount of money called a premium to be able to be insured against any kind of unexpected occurrences or events that the insurance company is able to pay in case that risk materializes. So we are looking at a scenario where insured says, you know what, I presume that I might have this risk, and I would really want someone to be able to transfer the risk to, that they can be able to pay. Talk of accidents, all of us know that we are in an area where we can easily suffer some risks that we do not plan for.
Yeah, we are all candidates of accidents.
Absolutely. So you can decide to say, you know what, because of that, I'm going to transfer the risk of that unexpected event to an insurance company, so that in case it happens, then I'm compensated, or my loved one are compensated. So it is very important to understand that insurance is actually transferring the risk that you would have borne as an insured to another party, which is an insurance company, to bear that risk on your behalf.
Okay.
Thank you.
All right. So if you're talking about transferring the risks, what are those different types of insurance we're looking at? Okay. Because someone would love maybe to buy a policy, but then they don't exactly know which type of insurance am I going to buy. So what are those different types of insurance?
Thank you. We have different types of insurance, and I'll be able to take you through the ones that we have, especially on the Ugandan market, so that we can be able to differentiate what kind of insurance policies that are out there that you can also partake. And we have a broad categorization of insurance policies. One is the general insurance policies. The other one is under life insurance policies. Now, under general, Joan and the audience, is where we see policies like fire insurance. We have policies like health insurance. We have policies like motor vehicle insurance. Those kind of insurances where a client is able to pay up to 1 year until renewal are really taken under the general insurance policies. Then on the other side, we have life insurance policies, and these are policies that largely go beyond 1 year of cover or payment that can even go up to 25 years. For example, I can tell you most of the insurance companies in Uganda for life insurance, they have products that are starting even from 5 years or even up to 25 years. So if you're there and you're saying, I want a cover that can last beyond 1 year, and you're looking at a life insurance policy, it could be for yourself, it could be for your parent, it could be for your children, on behalf of the people that you want to probably cover, then it is now you to decide and say from the policies that are on the market, which one do I want? Do I want under 1 year? That is now general insurance. If you want to cover people beyond 1 year, then you're looking into life insurance policies. And all of them have different characteristics that we'll be able to discover as we go around this discussion. Thank you.
So if I'm to go for the life insurance,
Yes.
how does it really work?
Okay, thank you for that. Life insurance, basically we are looking at a contract between, yes, you, the insured, and then the insurance company. And basically what you're trying to do is to insure your life over a period of time. And I've mentioned that it is for 5 years. On the market, we even have up to 25 years. So what you're looking at is what goals do I want to maybe have to be able to achieve, and I would really want to partner with the insurance company that I need to be able to save my money regularly for that period of time. But I am also cognizant of the fact that there could be risks that could deter me. Now, when you come for that, you find that you're going to take up a life insurance policy, and the risks that are covered under here, we have death, we have disability, we also have critical illnesses. So yes, you're planning for 5 years, or for 10 years, or for a 20-year plan. You are saving your money to achieve a certain goal, but then under life insurance policy, you are also buying what we call a protection. That in case any risk happens to you, the ones I've mentioned before, then your family or yourself are compensated. You talked of children at one point in your questions. You find that us as parents, we have plans that we have really we have thought about educating our children. We want to have a good life ahead, but we can imagine if at all and something unexpected happens and the parent is passes on and or is no more, what happens to the family that he has left behind? These families still, the children have to go to school, they have to live a good lifestyle, they want to continue to enjoy their lives the way the parent was probably providing for them. Now, life insurance policy comes to fill that gap that if at all a client passes on and they have dependents, then insurance company can be able to compensate the family so that the children can continue in school, the lifestyle they had is able to continue to be maintained, and at least there's some sort of financial security that the family is able to achieve. So that is purely under life insurance. You're looking long term, but also looking at the unexpected happening, and you want compensation for your dependents.
Okay.
Thank you.
So if, let me say the head of the family, that is the man, comes and would love maybe to insure his children, his two children, how is the premium determined? How does that really work?
Okay, thank you. Yeah, so first and foremost, when you want a life insurance policy, the first thing that we take clients out or we want to advise is that you need to be able to determine what amount of protection would you want. Because different people earn differently in terms of the resources that they have, cash flows. Others, of course, they have different maybe aspirations that they would really want to consider. Others, of course, the number of children are different. Someone has 8, another one has 2. So you find that those factors determine what someone can be able to pay. Now, to answer your question, when we get to have that, of course, as ICA was an insurance company, elsewhere, you find that they will have to first walk you through the terms and conditions. Are you eligible, first of all? Because not everyone can take a life insurance policy. As a matter of fact, you should be 18 and above. Okay, so some of those factors are considered. We look at your age, and then we're able to determine, depending on the
so the one who is buying or the one who is going to be insured? The one that is buying, the one that is taking up the cover is the one that we consider their age. Okay. So in case someone wants to take up a life insurance policy and wants a cover worth, let's say, 100 million, okay, that means that they are saying that in case I pass on,
between now and a certain period of time, I would want my family to be compensated with 100 million. So what do? You find that at the market, it is extremely cheap. You can take, it's just by paying about 1% of that, which is around 1 million shillings that you can be able to take. And in case of a risk to you, your family is able to get compensated with that 100 million. And that's what really we want to advocate, because a lot of people really confuse and they wonder, am I only paying for death alone? Remember, death is part of life that we need to plan for as well. But even when I survive up to the period that I probably set out, I can be able to get my money back plus interest on top of what I was able to save. So it is a three kind of benefit that you're getting. Yes, you're investing money because there are returns, by the way. Then you're saving for the future, but then you're buying protection. Now that premium that you're talking about is going to be based on your age. What age are you as you enter? What amount and protection would you want? All those determine the kind of premium that you're going to pay. But now, of course, all that we take our clients through and they're able to make an informed decision depending on their cash flows. Because however much you like 100 million, it could sound very good in someone's ears, but if your cash flow cannot support you saving that 1 million, then it's going to be strainful for you. And that's why we walk down through our customers, because it's a relationship to be able to understand how are your cash flows, what protection do you need, and then we're able to advise the appropriate cover that someone is able to take up. Thank you.
So let me say that on the premium, maybe I'm an engineer,
Yes.
or maybe I'm a doctor.
Yes.
So I have 2 children, and is there a starting point, a starting money they need, or even a person with 50 can come, or someone with 20 can also come, because
Yes.
that's also premium.
Yes, absolutely. So,
Yeah.
That's another thing that usually confuses people. And I can say, like, there are, of course, different companies, insurance companies have different criteria in which they look at what I'm talking about, their age considerations. But I'll speak on behalf of ICA because that is where I work. You find that when you come for a life insurance policy, the kind of timeline that we have for the age, we look at between 18 and roughly 55, 54 there. Okay? So if I told you are 50 and you want a plan, already you see, you're able to qualify. But then people who are 50 and above, you are supposed to go for what we call a mandatory medical examination. So yes, we allow people between that period, but at 50 and above, we take you for a mandatory medical examination. And what we're trying to examine, not like we are trying to run away from insuring you, but we want to see the risks that probably you have, your condition, how is your health condition, vis-a-vis the policy that you're taking up. Because as you know very well, we are insuring you and insuring your life against an unexpected. So when you're coming on board, we ask questions, for example, how is your health, Joanne? And you need to be able to tell us exactly how your health is. Do you have existing conditions? Do you have any risks to life that you have been exposed to? Is your work having risks to it that is attached to that, so that we can be able to assess that risk? So all that we consider before we come up with a premium that we give you: your age, your lifestyle, because we also ask questions, for example, do you drink, do you smoke? Because people who are exposed to such are more risky to insure. And all those things are assessed together, and then we're able to come up with the right premium or the right kind of coverage that we can give you. As a matter of fact, to wind up your discussion or your question, I would say if you came when you were 20, another one comes when they are 50, you find that even the coverage is going to be a bit different, because of what we call, of course, the risk that some 20 has is not the same risk, especially health-related risks that person who is 50 is going to come with. So that's what we look at to be able to determine some of the coverage pointers or structures that we look out.
So you talked about a coverage. What does that really mean?
Okay, so coverage means the maximum protection that someone is able to get when they come to insurance to be able to get insured. Because at coverage, we are looking at what risks are we looking at to cover. I'll give you an example. If someone is looking for a health policy and we are looking at coverage, we are looking at what risks are we going to cover as far as health is concerned. And you find that on the market, not all companies are going to cover the same health conditions. Some people are going to say, we are going to cover only people with only these conditions. Others are going to say, these ones are excluded. So When
because
you're
of
talking
age that you
coverage,
talked about, or
also,
someone may be 50 and feels like, now let me go to insurance to get a policy.
But remember, people who are 50, they're exposed to risks that are probably health risks that are different from the people of 20.
True.
So the coverage means at what point are we going, it's like the boundaries that we are going to take as an insurance company to cover you in case of any risk. And of course, we also quantify them. You find that when you come for a policy, we are going to say, if at all, let's say you took up a protection, what I was saying of 100 million, then you're covered only up to 100 million. Not 80, not 200. So you find that we have still a mark or the boundary that would reach, depending on the premium that you're paying, depending on the age as well, because people who are, let's say, beyond 55 on a life insurance policy that we have called an endowment plan, you find that they are not eligible for that. Even if you have all the money in this world, you find that when you're 55 and above, you cannot actually qualify for that. We only take people who are maybe 18 to 54. So that is very important to know that, yes, life insurance is good, we would want it for everyone, but there are some criteria that we look at which might actually exclude some, especially the age. And of course also the risk that someone brings on board. If someone comes and they are too risky to insure and they already have a lot of existing conditions, it might be a little bit costly to insure them. And of course some of them we postpone them, we wouldn't say no, some of them we postpone them, and others we actually reject upfront. Having assessed the risk, and we find this is really, really too risky to be able to bring on our books, we find that we reject that.
So what do you tell them? As in, we can't take you on or try somewhere else, or what?
No, we really, really do it politely, because honestly we have terms and procedures that we look at. If at all someone has really given us their medical history, and we find that there are some areas that we cannot probably cover.
But then why? If it is insurance, you should take on everyone.
Yes. But within, we do that within specific procedures, Joanne, and also policies. Because remember, we're carrying this risk on behalf of the client. Now, if at all anything happened to this client, as an insurance company, we would need to have to pay. So we do calculations on how much risk can we take. Yes, we take some risks, but there are some that probably we might not take. I can give you an example so that you can understand. For example, most insurance companies, they do not insure people who are in extreme sports. Talk of maybe racers.
But then why? Because now I need to insure my life.
Because of the risk. The risk is too high. What we look at is the risk that someone comes on board with. Someone who is racing, you can agree with me, or people who do bungee jumping. It is a very high risky kind of sport to do, that any insurance company would really want to really first assess that risk. And most of them, I can say, maybe not all, because there could be some insurance companies that take up that, but I can tell you most companies, because of the high risk that some of these elements bring on board, are not actually covered. But of course it means that in case something like that happens, then of course another person out there who wants to be insured and says, maybe I can avoid this, and then I bring on book another kind of maybe policy which does not have that risk element in it, will be taken up. So it's not like we're rejecting, but we are trying to reduce also on the risk that we have. Because in case of any risk happening, we are going to pay over and above. It's too much that we have to pay. And remember, we're also a company that is here to make money.
Profit?
So. Yes. We also have shareholders who expect profit from us. So if you take up a very high-risk policy and you're going to pay over and above what your ratios can actually maybe allow, then you're going to really face very, very difficult time with your numbers. Okay, so we also insure within a certain amount of risk.
So that means for you only talk on low risk policy.
We have what we call a risk assessment. We have low risk, we have moderate risk, we have
then
high risk.
Okay.
Now, some high risk might be taken on. I'm not saying all high risk are going to be taken, but with some caution or some procedures. Okay. They might ask you to pay extra premium, for example. Okay? Or they might ask you, as I told you, we can maybe say, let's postpone it for some time and we first do more assessment. But not like really we reject all risk. There are some risks that you find you can say, okay, you're going to have to pay an extra premium because of the high risk that is coming onto, that's coming into our book.
Okay.
Yes.
So if I'm to pay the premium, who are the beneficiaries? Okay. Who are the beneficiaries?
So if you're paying the premium, and that is a very, very important question you're asking, for life insurance policies, because we have that uncertainty that I've talked about of death, of permanent disability, of critical illnesses, you find that we would really want to get to know who are your beneficiaries in case that happens. Because you agree with me, Joan, in case we insure your life and we say it's a life insurance policy, it's a 10-year policy or 15-year policy, only God knows whether me and you will be here 10 years from now.
True.
So we ask ourselves, what if an unexpected event happens after 2 years, after 3 years? Then how do we compensate you or your loved ones? But of course, if you're gone, then we look at who do we actually pay out this money to. And
so do you have a limit of the beneficiaries, or I can put my whole family there?
It's okay as long as you give them percentages. It's you who really knows.
Okay.
We have people who say, me, I have 10 children. I would want all of them to be beneficiaries. So we have what is a scale that we have percentages that you actually allocate. You can say 5% per child or 10% per child. And then, of course, in the case of an unexpected event and maybe someone has passed on, we distribute this money according to your requirements or your what you asked us to do. So very, very importantly, we need beneficiaries before anyone is able to take up a life insurance policy, because it helps us to have a fallback plan to be able to know who is the appointed beneficiary for this amount. As I told you, someone could pay their 1 million shillings and their sum assured or protection is up to 100 million. This is a large amount of money that we cannot stay with as ICEA. We need to compensate the people that actually we are appointed by our clients.
So for someone who has maybe insured like 100 million,
yes.
How much would they have paid?
Yes.
Monthly? Is
Yes.
it annually? Is it
Yes.
quarterly?
Okay, thank you so much for that. So when you take up a life insurance policy, the first thing, as I'm telling you, we determine how much premium you would really want to pay vis-a-vis the protection that you need. Now, the example I gave, someone is wanting 100 million. Roughly, when you are, let's say, between the age of 25 to 35 there, you might find you're paying about 1 million shillings for that.
Per month?
Per month,
okay.
for the next probably 10 years.
Okay.
But remember, death does not make an appointment. It can happen after 2 months, it can happen after 1 year, it can happen after 3. So we say that in case it happens at any time between now and the 10-year life insurance policy that you took up, even if it's after just 1 year, we should be able to give 100 million to your dependents or to your beneficiaries. How much would you have paid for 1 year? You find that you would have paid, 1 million times 12 months is 12 million shillings. But you have a cover up to 100 million. So who wouldn't want to have such a protection tool to you or to your family? Because we see a lot of things happening. Someone passes on, they have a family, and they were in school, but because someone did not take such a policy, then you find that they leave their family exposed. The children had to go to school. You find that now school fees is a challenge. Maybe they had debts, now that's a challenge. Maybe they were renting, or that is now going to be on maybe the children and, of course, the mom or the dad who was left, whoever it was left behind. And that's why we say this cover protection is very critical for any family that is really so passionate and looks forward to support, to have financial security for their loved ones in case of an unexpected event like death, which is very, very important for every family to have. But of course, if your cash flows support you to have a protection of 30 million, then you're going to pay roughly probably 300,000. If you wanted a protection of 50 million, you might find now the premium comes down to from 1 million over the 100 to maybe 500,000. So it really depends on you and the kind of cash flows you have and the protection you need.
Okay.
But very, very, very good recommended product for any person listening to me right now.
Once again, we want to appreciate you. Whoever is watching us, we want to appreciate you so much for tuning in to watch Money Talk Show on Hope Channel Uganda. And I believe that learning is taking place. And I want to thank God for this far once again. Today we've been able to unpack the essential basics about insurance. What is insurance? Why is it important? What does it mean to maybe how are premiums determined? So I believe that you're going to be joining us in the next episode to unpack more about insurance. Please don't miss out. Stay financially informed and empowered. God bless you and shalom.